Welcome everybody to Beyond Maintenance. I see a lot of really familiar names on here, some new ones. We took a little hiatus because everybody's getting in that summer mode, so it feels good to be back. As you know, this is just our out-of-the-box thought leadership conversations around maintenance and how it impacts the financial and operational aspects of your business. We have two great panelists with us today, and I'm going to let them introduce themselves. I have Randall Henderson here, VP of Residential and Commercial at the PMI. Randall, do you want to give yourself an introduction?
Yeah, so if you're not familiar with PMI, PMI is a franchising organization. We sell a property management model out of the box, including software and vendor partnerships and a stack of training and support. And PMI has over 400 locations currently. Each of those are individually owned and operated. We're managing around 100,000 properties in the country right now, primarily self-managed or it's very small mom and pop investors are kind of what we specialize in. So you might have a PMI near you in your location. If you do, feel free to reach out. They're amazing people. We are, as a brand, really trying to think ahead and think of what's next, because we are truly a small business at heart still, and entrepreneurs ourselves. So super excited to be on today and talking about maintenance, because we've had significant changes, as you guys know, in the market the last 6 months, heavily impacting investments, NOI, and things that Ray and I are going to get into today. And what does that mean for you, and how can you pitch better preventative maintenance? And so I'm excited to talk from my role and what I've seen. My background is as a property manager. If you're wondering, I'm not a corporate guy. I was an entrepreneur for many, many years before selling my companies to join a bigger opportunity and an opportunity to teach and train, which is my love and my passion. So that's why I'm here.
Thanks for being here. And we have our very own CEO and co-founder, Ray Hespin, is joining us also.
So he has such a better talk track prepared, and he mentioned this background that was in property management, which I think is really fantastic. I don't know where mining engineering fits into this, but my background is in operations. It's kind of interesting, and the timing of this webinar is interesting. I got my start in construction material and operations during the last recession. And so a lot of the things and a lot of principles that I went through about how do you basically deliver better quality at lower costs, I think this webinar is just going to dial right into that, and what we can expect the industry to demand of us as the property management industry. So I'm super excited to talk about something I am incredibly passionate about, which is how do you drive down costs to make the renters happier. Super excited to be on.
Excellent. So as always with Beyond Maintenance, we want our participants to take an active role in the conversation. So please post your questions as they come up, and we'll do everything we can to answer them in real time, and just have a lot of fun in the next hour. So
I see some excellent property managers on this call, actually, as I look down the attendee list. So I expect some great questions from the crew here.
Absolutely. All right, so Ray, we're going to kick it off with you, and let's talk about how the need for preventative maintenance has changed in this current market.
I think what's pretty interesting, if you kind of watch some of the dynamics, we've been on this real heater of real estate market, and I know that everybody's seen that. We have on our platform probably right around, at least today, around 300,000 rentals. Having the maintenance managed through Property Meld. And what's kind of interesting is over the last couple of years, we tend to see some changes between the consumer market and the rental market. And so what's been really interesting to watch very lately is a huge slowdown of the consumer market. We're actually watching as our customer portfolios expand. And the thing that we're seeing right now is investors craving of how do they get better returns out as costs are going up, as their assets and holding the debt on those things is going up. How do we make sure that stuff is in a really good spot, so that way the investment market, the rental market, continues to be the successful haven for cash?
Ray, I love that you brought that up, because, and guys, you know this, if you're an investor yourself or you've worked with investor, for some of them, cap rate matters. And think about the impact on the cap rate as costs go up your NOI, what's going to happen to that? It's going to go down. And as the value of the properties skyrocket, which we've all seen a 15% jump in the last year, imagine that what used to be a 9 cap is now a 4 cap. And the investors who were interested in a 9 cap a year ago or an 8 cap or a 7 cap are now saying, you know what, I like a 4 cap. But the thing is that with that comes significant change, and you've got the denominator of that equation, which you cannot control, right? Which is dictated by the market and by the interest rates, which, by the way, I'd love to get into a little bit as well. But the numerator is where you can make impact, and where you look at the NOI on the top of that equation, you can truly make a difference. And Ray and his team have been working hard, and I know others in this space, in this industry, have been working to try to show the value of that preventative maintenance and how it can impact the NOI.
You know, I would love to kind of jump off on just something super quick, because I think the big thing is, like, as you talk about NOI, I think one of the things in our company that if we sit there and try and get our employees to understand our customer, helping them understand our customer's customer is really important. And I think that's what we're kind of talking about a lot, is like, if you can look at it from the aspect of the real estate investor, the person who owns the property that our customers will service, then you can get really good at how do you help them hang on to them, sell more, do all that. And Randall, you talked about something, NOI, and I am such a fan of that becoming commonplace language in this industry, because I think that ties directly into why property management firms have to and must get really good at delivering on that. And so if you think about, there was kind of a panel, and I forget what this was early 2020 or mid 2020, something like that, where we had this conversation of thinking about these individual landlords, like, accidental landlord type investors that a lot of our customers have. And then you have these institutional clients. Can you get them to think about the same thing, which is they all want cash out of their property? And right now, Randall, I know you've got some stats, some cool stats on like the breakdown of NOI. But the thing that we definitely notice is the cost to maintain is far outpacing inflation. And so what is that going to do to the investor's perception on how good of a job the property management firm is doing, right? And Randall, I don't know if you have those off the top of your head. I got some cool stats on.
For sure. Yeah, I want to dig into those. I do want to just say one thing, that if these terms, if you're out there as a property manager and you're like, ooh, I don't know that I understand like how to explain NOI or cap rate or cash on cash or an internal rate of return. PMI has tried to adjust to this changing market. We actually just launched an investor certification class within PMI. I would say get educated, educate yourself so that you can talk to these investors, because guys, the gap between the institutional and the single family, as Ray mentioned, when all information is available, that gap starts to narrow and close, which means that, investors who are, by the way, at a higher rate than ever, still investing in single family, they want a property manager who does more than just a small piece of their investment planning. So as a property manager, one of the first advices that I would give you is to educate yourself so that you can have a broader conversations and be more than just a line item on their budget. Mm-hmm. Because for most property management, most investors, and think about it, 70% of the investors, the small mom and pop investors, they do not hire a property manager. So the reason why is they don't see the value. They see you as a line item. They're not getting all that you can offer. In my view, who better to consult and to work with an investor on their property than the property manager, because NOI is so key to that. So Ray, that's funny that you call out, because I'm sitting here holding the slides that are actually your slides around operational cost breakdown. And it's amazing because guys, these like what Ray is trying to do at Property Meld, and you guys are our customers kind of working through this, is saying, look, how much more can you save? What is the true cost of repair and maintenance? And what would happen if you can shift that into a preventative approach versus a reactive approach? So when you look at the percent of revenue for, and Ray, maybe you can help give me a little flesh on where these numbers came from. But the repair and maintenance line item as a percent of revenue is 12.6%. And I think that's, Ray, for the smaller investor. And then for the institutional, it's 11.7%. So guys, it is a higher cost, much higher by 2 times as vacancy, because when you look at vacancy across that same portfolio, your vacancy is going to be around 5%. And as we know right now, guys, it's probably more like 2% in single family because renters are staying an average of 3 years. So when you look at the cost of doing business and what's dragging that NOI down, it's repairs and maintenance. It really is at a rate of the highest, like calculating part of the NOI. It's higher than your management fee, which is, if you're at 8 to 10%, this is at 12.6%. So it's just, it's something to look at. But Ray, you want to flesh those numbers out any further, or talk to us about where you got those? Or
Yeah, so I can't take all the credit for those. There's a great company called Marker, did some Meld consulting for them to do it, but they do basically analysis of large scale portfolios so they can help large funds make buying decisions. And so the idea is they put this information out, said, here's the breakdown of the costs. And the really interesting thing about maintenance, it's the largest operational line item. The only thing that costs more against rent is property taxes. Mm-hmm. Everything else falls underneath that. And the thing that I also find super curious at Property Meld, obviously we process, I don't know, probably 1.5 million service issues a year through our platform right now, and it's pretty rapidly growing, is the vast majority is reactive. And the way that I always kind of liken it to is, if we were to think about applying the same philosophy in how we treat maintenance in rentals right now, like we do anything else, like let's take your car and be like, I'm going to drive it until it quits running. Like, I'm just going to wait. I'm going to get it towed to the shop. And it's going to be really expensive. You're talking about engine replacements. You're talking about changing very large things out that are very expensive. So what have we done in those types of situations? We've implemented standard oil check times. We've implemented, here's when you get your transmission flushed. Here's how long your tires should run and be changed out for. We've got check engine lights that actually give you indications of something going wrong before it stops running. So we've done all that basically allows you as a car driver to not wait until you run into catastrophic costs to make some adjustments and changes. And so preventative or maintenance is kind of in that, right? Like we wait until something breaks. That's how many of us do. We've got an air conditioner that's went down. We've got a water heater that's leaking. We've got, a variety of things that ultimately that we say, hold on a second. We're doing it in the most expensive time possible, one. And number two, we're making the resident very unhappy, what is going to create a lease churn risk, which is also something that your investors and owners don't care about. So I think that's kind of the interesting thing about maintenance. Sorry, Randall, you were saying.
No, I was just going to jump in. When you mentioned lease churn, that just is like ding, ding, ding for me, because guys, if you want to reduce the cost to your owners, if you want to make your investors happy, you keep a long-term happy tenant in place, right? The key to cash flow in business, and not every investor is keyed up on the cash flow, but if you're someone who's looking for that cash flow, vacancy ruins that faster than anything, right? Anyone who's an investor themselves knows that 1 month of vacancy or 2 months of vacancy pretty much wipes out the cash flow for the year. Well, the number one reason for churn, to Ray's point, is what, guys? Madison, do you know what the number one reason for churn is?
Maintenance.
It's maintenance issues. Absolutely. It's maintenance issues. So if you can get in front of those and you can actually make tenants super happy in terms of how their property is being maintained, not only are you going to save money by reducing vacancy, but you will also save money by not fixing your car when it breaks down on the side of the freeway, right? I love that analogy.
That's so good, by the way. And sorry to kind of jump into here. So Randall, you and I, last time we had a conversation, I was actually down in the Salt Lake City area at PMI headquarters, and we were going over some interesting stats on owner retention that we're starting to uncover, right? One of the really interesting things is everybody thinks that institutional investors are really savvy, really tight by the numbers, and the individual landlord operators are just wanting headaches gone. But what we did with Property Meld is between the 300,000 rental units, we've got our customers have around 190,000 investor owners on our platform right now. And what we're able to do is basically carve it up and look at like, what are the things that drive the retention after, that an owner renews after, after 1 year, 2 years, 3 years, and who churns within 1 year, 2 years, and 3 years. And the number one reason that we could call, which is the strongest correlation to churn, was the cost of maintenance as a percentage against rent price. Which is really funny because they don't have access to that information. And if I was to guess, and this is a broad assumption, the investor owner, so the property management's customer, is probably not going back and getting their owner statement every month and then sitting there and looking and going like, when am I exceeding 12%? I think I might change the property management. There is a very weird gut feel that matches the cash flow thing that you're talking about, that there is a very clear differentiation and the line is somewhere around 12%. If you stay below that, you're safe. If you go above that, you become pretty exponential in your churn risk. And so this preventative maintenance and the costs that are going up in maintenance and stuff is so important because it is the number one driver still of an owner leaving. And the resident turnover costs, that's, turnovers aren't free. So
it's so interesting to see. I love it when the data matches the gut feeling, right? There's nothing better than that. But Ray, I will say that it's been interesting to look at because I believe firmly that the boots on the ground local property manager is the way of the future. And do you think that these institutional investment groups know better than we do, know better than you do how to manage properties on a local level? Of course not. Of course not, right? And many of them are hiring us to do that for them because they haven't figured it out. You guys have spent years and years developing that skill set. But now we need to advance that to the next level and start to look at maintenance as an opportunity to drive NOI production and have better conversations with our personal investors. Just a quick, interesting question. You guys know that the SFR market is white hot for investment right now. What would it do to your portfolio if every one of the investors that you work with, you presented a property with a good NOI and a good preventive maintenance plan, and you were able to sell that property to them? What would that do to your portfolio? What would it do to your personal revenue, especially if you're able to act as the agent, which I think in most states you should. But just think about that as you look to the changes of the future. How do we adjust? How do we move? We do a better job communicating with the investor base that you already have. So that's what I would say on that side.
I think like one of the things that we hear like in conversations with customers too, it's like, how do I take this? I know this, I hear this, like, how do I take this create a high level conversation with my owner to get them to understand that it's more maintenance at a lower cost. And that's what's going to bring the percentage down.
I was in Denver probably about a month ago, just kind of doing some rounds. I miss seeing some of the customers with kind of the inability to do that. And so I was down there in Denver. And one of the things that we talked about is we launched a preventative maintenance program, or at least it's in beta right now, called Property Care Plus. And the idea behind it is we know that logistically it's incredibly difficult to get owners to pay more for different services, right? The things that we've seen in the past and when we've done research, and this is what we're going to be talking to the customer, a lot of people used to sit there and go, send an email out to all your owners and investors with a survey. Do you want preventative maintenance done? You sit there and you go and you bring it in and all that. The challenge that we consistently got from a lot of people is I've seen this kind of play out. Everybody knows that preventative is important, but there is a very hard sell on being able to feel good about owners or investors like opting in, engaging in this, right? So one of the things that I think we even we dug into some of these customers' metrics on like how they were doing this before we put together this program. Depending on the state, has different legal requirements. Like you cannot charge them anymore for services that you don't have in the contract. I hear that. Some of these other things that are there. But the big thing is, how do you at the same time drive their costs down, educate them and drive their costs down? And actually the big thing that I tell people, or the thing that we had a great conversation about, I shouldn't say tell people, is that can you use this as actually an acquisition and retention tool? So we ended up launching it. And so everybody knows the logistical nightmare of getting owners en masse. If you're managing a portfolio of 500, you're managing probably 350 investors. The logistics of getting all those people on there are super difficult. The the thing that you have to do is make it easy for the investor to ultimately say, yes, I want that. That makes sense to me. Yes, I like that. You know what? I don't really need gutters cleaned annually, you know? And so anyways, we built a product and it's in beta right now that basically allows property managers to have like a catalog of services that they can build to ultimately show investors and owners, hey, this is stuff you wouldn't do yourself. You're not going to do a semi-annual HVAC check. You're not going to do an annual water heater inspection to make sure that you're not going to have a failure. We're going to do an in-home inspection twice a year that's going to check X, Y, and Z to protect you on whatever. Like those are the things that ultimately investors sit there and go, wait, but I would have to leave that if I were to go to self-manage myself.
I love that.
Chances are I'm not going to do it.
Mhm.
So Ray, are you ready to have your mind blown?
I'm ready.
Check this out. What if, so first of all, we need to have those conversations with the investors. That is point number one, because that 70% of the market that is self-managed, guys, that's our growth opportunity. That's what we can do, but only if we can show the value. So if you can present a product of preventative maintenance that actually shows how their costs will be reduced over time by being professionally managed versus self-managed, that's one. So now here's another concept that I'll just throw out there. This is cutting edge stuff. So, right, every single one of the investors that you guys manage for, if you had a product of preventative maintenance that was so compelling, you've got a built-in ability to offer that to their own homes as well. You have a network of, let's say you have 300 doors. That's potentially 250 other properties that you're doing nothing on, where you could add significant value through a preventative maintenance plan with a rev stream for you that would relieve pressure on the other side. So if you need a pitch to try to say, here's why you're going to save a ton of money going with me. Well, look, my management fee is 2%, assuming that you're getting the preventative maintenance side on all the properties that investor is interested in. Is your mind blown, Ray?
I am. So what you're saying is you're saying there's a revenue opportunity that could take pressure off some of the price and costing of the line items that management's able to do and make same, equal, maybe greater money.
You got to think about what is going to drive that 70%, which, by the way, has never chosen a property manager professionally because we're in America and hell, I can do it myself, right? But if the cost is the issue, we are all of us on this call are designing tenant programs, owner benefit programs, all kinds of different programs. Here's an opportunity to relieve even more pressure off the fees and add significant value to them in the preventative maintenance.
I'll tell you what, I don't even know if I should publicly admit this, but we probably asked about 2 years ago. So I asked all the Property Meld employees, who here owns a rental property?
Yeah. Oh yeah.
And there was probably 5 employees at the time that said, yes, I own a rental property. It's like, well, who of you employs a property manager? And this is what I shouldn't admit publicly. None of them. And I was like, that's our customer. But I asked that follow-up question. I was like, so why don't you? And the number one thing I heard was, it's too expensive. I can't afford to. And I said, what if it was close or like for like the cost of you doing it yourself? No brainer. 100%. Nobody would be a landlord. And so the thing that you just brought up, which is, can you be the person that helps decrease their cost by your service offering, is going to be the thing that truly flips that market. I think, and I'm giving a completely anecdotal story, but I don't think anybody loves landlording.
Well, back to that too, like if you did that same survey today, Ray, how many of those of us that said we do have rentals have since sold them? Because of why? Because of maintenance. It's the headaches of dealing with this while you're doing a full-time job. And even though it's a handful of units, it's like we didn't have time, and a lot of us went ahead and sold those units.
I was going to say, Madison, that sounds like a Madison story. It sounds like a very real Madison
I'm hanging
story.
on to mine, but I know that there's several in the office who haven't.
And if I could share one other aspect to that, to your guys' points, and Ray, here at PMI, if I did that same poll, it wouldn't be 0%, but it wouldn't be 100% either. It would be probably 50%. But, and that's at a property management franchise, guys.
Yeah.
However, saying that, there's another piece as the market has turned and changed that we need to add on to this. And that's that, guys, the cash flow crunch is truly happening. And it's happening in Utah. It's happening in Colorado. It's happening in a lot of states that have generally been priced in the middle, where maybe you could find properties that cash flow with a 20% down payment. That is gone in Utah. You cannot buy a property that cash flows, but you know where you can still do that? Parts of Tennessee and Alabama and Georgia and Michigan and Pennsylvania. There are parts of the country where you can still buy cash flowing properties, and to be able to present those investments to your clients, you need to understand that preventative maintenance story and how to create cash flow. And you need to kind of broaden your scope a bit, I think, as far as who's involved and who's doing what there on those properties. But I don't know. We're just seeing a cash flow crunch right now.
You know, and just one data point that I wanted to do. So you talk about this cash flow crunch, you talk about the compressed NOI. So I actually made a post about a month ago on the changes of invoice pricing. So Property Meld probably has around close to, I think, $270 million of work go through it annually. So we got a lot of data and insights that can say, how are things changing? And I'm just looking at my notes. Since 2018, electrical invoices are up 110%. Ooh. HVAC invoices are up 61.5, and plumbing is up 54.1. And I don't know if rents move that fast. But I think it continues to push it. But one of the things that I kind of wrote down in here, because I think it's important for people to understand, is this is not just how do I make my customers win more. That is important. That is what every one of us should do. But this to me, when I went and visited these customers down in Denver, as we were talking to them, they're like, this needs to be in the packet of every investor coming on board. It's got to be the pitch. Like you said, Randall, like it's going to be, this is why I can actually improve your financial outcome. You're not just paying me to remove headache. You're paying me to improve your financial outcomes, which broadens that market. But the second thing that's really important about this is not just a sales tool. I think it's a compelling, very, very powerful one, especially now. But the second part, it's retention. So the other thing that we did, and when we studied in this owner retention data, owners that actually have more repairs done have a better retention than those that have less, but it's done at a lower cost. And so the only way that we could basically go in and attribute that is that a lot more preventative maintenance, and going in and looking at, there's a lot more preventative maintenance in that was driving some of that. And so I think this here is a retention tool, not just data wise, like it's proving it to be that way. But if you can imagine being an investor and you're doing HVAC inspections, clean outs, you're sitting there doing annual gutter cleans, so you don't have like water issues running into basements if you've got them. You're doing annual water heater checks to make sure that they're doing. And if a potential investor is sitting there going, I have to walk away from that, they're automatically thinking, how do I bridge those services that they were providing to make sure that I'm not going to lose that when I move on. Mm-hmm. Mm-hmm. And I think that's the thing that is really compelling as well, that drives retention. It's that what am I losing if I walk away from this?
And Ray, I think you mentioned one other part that I think we need to remember as property managers. We oftentimes sell ourselves as the Advil. We're like the Advil to the headache, right? I think we need to shift that a bit, and forgive my tongue-in-cheek reference here, but maybe you need to be the Viagra instead. Maybe you need to sell the dream. You need to sell the quality of life. Sell on the positive side that you can add in.
I feel like I have some really good marketing things I can do here with this.
So make the shift from the Advil to the Viagra so that you can sell the dream instead of the pain. Because as long as property managers are selling the pain, we'll always be regarded as a line item on the budget. Yeah. Right. We have to have property managers because of the headaches involved. Shift that, make it about what can a property manager add value to you and what else can they do? This person who knows the property better than anybody, what else can they do for you in that scenario? So sell the dream instead of the pain.
I love that so much, by the way. So first of all, I realized I did these hand marks. What I was intending to do is say, Madison, this is what we cut and throw at the beginning.
Oh no.
That right at the beginning.
Yeah.
But sell the Advil, sell the Viagra, sell the drink.
I'm a former pharmaceutical rep, right? This is right up my alley.
But I think your whole point of that is, and I had a great podcast with Jordan Muela, who highly respect him, Profitable Property Management podcast. And the thing is he was saying something very similar. He said, we have been selling peace of mind and we have been selling headache aversion. Mm-hmm. And he's like, that only gets a group so big. He's like, we have to sell the expertise that we bring to the market that actually improves outcomes. Agreed. And I thought that was very profound. And I think your way of describing that, Randall, that is like the opportunity of what you can get from there, whether it be a Viagra or whether it be property management interchangeably. That's a really powerful statement. I really love that.
Well, it's forced us to look at our offering differently and say, all right, well, what are we missing? Because again, if you talk to an average mom and pop investor, and again, Ray, to your point, you say, hell, why didn't you hire a property manager? It's too expensive, right? They don't see the value. Property management is it's like 5% of their world, of their mind share about investing in real estate. How big of a miss is that? We've done a terrible job at kind of presenting ourselves as, and I think I see a couple of names on this call who have recognized that and already adjusted and are working with investors differently. And I encourage you to do that as a property manager. Think about what value are you adding and how do you sell that?
So Randall, I'm going to ask you a question. You're super familiar. You work with a ton of property management companies. I got asked yesterday on preventative maintenance, like what's a good metric and a KPI to like for a company to set a team? And there's a whole bunch of stuff we talked about, but I said, I don't know, but I would guess getting 30% of your owners on preventative maintenance by the end of this year is reasonable. And I said, what do you think? And they said, I don't know. But so I'm asking you, if these people on the call were to sit there and go, hey, listen, I really need to do preventative maintenance. I want this to be part of my sales pitch, but I have to measure it whether my team is successful or not. And we're going to have this as a real initiative. What percentage is reasonable to start bringing these investors on that we could give some guiding thoughts to, or at least.
So start small, guys. If you're wondering where to start, we'll start with the big ticket items that are typically a part of any preventative maintenance package. And if you don't have that, that's where you begin. You begin with preventative maintenance packages where you schedule the melds, which I love about that. You can schedule the melds for years in advance. You just schedule the meld, right? And it automatically will happen. So start with your annual inspection, start with your HVAC, start with your gutter clean out, start with your spring cleanup or winterize or whatever is applicable for your area. But just build something, because Ray, honestly, the adoption rate of people choosing those is much higher than 30%, what I see from my level. And it could just be because of how we're presenting that package. But we're about 60% of our investors that come into our system are choosing that up front. And we're now looking at that number and saying, maybe if we altered our revenue model or our pricing model, we could get that even higher and build that in better with a story behind it. You got to be able to sell that and tell the story. But yeah, I think if you initiate that today, you should be above 50% of your investors that are choosing that preventative maintenance plan.
So I love that. I will say the other thing that I find super interesting and compelling about preventative maintenance, by the way, and this is the thing that's a real mess in the industry. If anybody has got, like, we've got customers that sit there and used our workflow engine to automatically dispatch HVAC stuff in June, because those, if you have a thing, just, it doesn't even matter, send somebody out, because the demand for HVAC professionals in June and July gets so nuts, right? Yeah. Preventative allows you to level the curve out through the entire year and have way more predictable maintenance. And the big thing that's really awesome about that, especially for those of you who have internal technicians and internal teams, that is billable work that you can plan well in advance, and you don't have to worry about necessarily running out of stuff and hoping something breaks. You can have cadences that allow you to sit there and go, what's the work we got to do this month? And it's planned out. This is what allows us to get to a way more predictable revenue model long-term if our industry and organizations get really good at this. And like Randall said, you get the ability to make money off it. It allows you to be much more creative in your pricing models. that will allow you to be hyper competitive and really, really beat out a lot of competition.
Yeah. And to that point, Ray, I just want to expand that a bit because, that 30% who are choosing professional property management currently, excuse me, the reality is that price is not typically a factor unless it's egregiously different when choosing a property manager. I'm sure most of you guys on this call recognize that, in your experience, right? Whoever is going to have that first conversation and can be the Advil usually gets the business when you have in that 30%. But if you're going to expand that, if you're going to take it into the 70%, and if you're going to look at actually providing value to someone who is a true self-manager, you have to have that prepared and planned, and look at your revenue and look at what you're offering. And maybe you create a different package to attract that person in, or at least you get some sort of preventative maintenance numbers where you can sell a story of why a professional property manager makes a lot more sense than an individual. And I don't think we have the raw data compiled yet around that. And I know that Ray, you and your team are working on showing the value over time in terms of actual dollars. I know it's a tough thing to categorize, but if we can do that and you can show a higher NOI, you can show better returns for them, it's just going to make it so much easier to go after that self-managed landlord.
I just wanted, and I know, Madison, you're going to say something. I think, Randall, the thing that you said that was profound to me in that statement was these are different personas and we're treating them all the same.
Yeah.
Yeah.
And it's got to be what the message is there. They might just say they wanted the Advil. Now, it's good if you give them the Advil and the Viagra. There's nothing wrong with that, but these ones need the Viagra.
Yeah.
And I think that's a great way to put that I think was eye-opening for me as you were talking about that.
I do have Vanessa has a question quick, but I'd also like to know just from the participants who is currently doing preventative programs, who's interested, have you gotten your feet wet in this at all? So tap in the chat, that'd be great. And Vanessa asked, do you guys have some type of template list on different preventative maintenance they can offer per season? I think you just made my next blog post topic, Vanessa.
That's a great question, Vanessa. And candidly, like a lot of what we do is build product that helps property managers deploy their expertise really well. So a lot like our Property Care Plus is actually a tool that allows you to surface this stuff to investors, but we often rely on the property manager who knows the stuff to go check, who knows the things that ultimately drive it, to kind of make that. But that being said, we've learned a lot since putting this in beta. And I think, Madison, your point of, can we get some more of this information compiled out there? And I'm sure Randall and his team have got a laundry list of stuff as well.
We do. Yeah.
Collaborate.
Yeah. I've seen it done a lot of different ways. So we do have 400 locations. Each one of those is individually owned and operated. So we're up here saying you should at least have seasonal preventative maintenance plans. So start there. Start with your seasonal preventative maintenance plans. And add in an annual, some sort of big report or big preventative maintenance plan on that side. And then that's a great place to start, right? Just do those two to begin. If you want to get more involved, of course, you're going to have your HVAC side to think about the biggest potential costs that property could have if the car, again, to go back to the analogy, if the car did break down on the side of the road, what would that look like and what would that cost be? And then sell to that fear and the ability of you to help prevent that.
Is there an opportunity in this to become part of that more broad sales strategy? Because I can only imagine by asking a few questions, like if I was to call, and I just, again, hypothetically, if I was to say for rent by owner, call those lists and be like, hey, I'm curious, what exactly preventive maintenance programs are you doing right now to keep your costs down? I would imagine you'd hear crickets. Yeah. Is that nuts?
100% you would. Yeah, absolutely. They're not thinking about that. No, they're just driving the car and it's going to break down the side of the road at any moment. And then they're going to hire a property manager and it's too late. So, and Ray, we're doing a lot of those outbound calls to the for rent by owners. And preventative maintenance needs to be a big part of that pitch. And again, I think, and if you are set up and can run some analysis on your portfolio and kind of break that down and see, I know that we're all working on trying to get the metrics better on that, but yeah, I absolutely agree with that thinking. And just have that conversation. It will be crickets. It will be, along with what happens in the event of an eviction, right? Or
Yeah.
our favorite question is, have you ever had a tenant that's behind on rent, and how did you handle that? And it's like,
perfect. There was a good question, and Brian Jenkins is asking, or not Brian, Jen Korean asked a great question, preventative maintenance for plumbing. Vanessa and Brian have some great answers there. The other thing that I've heard of property managers doing is they're doing their semi-annual inspections, is actually checking the water pan of hot water heaters to figure out if they've got some major corrosion issues that they're starting to identify. It's a way to kind of catch a hot water heater before it goes nutso, as another example there. There's a checklist item on that.
Yeah. And Karina, I would say, you can absolutely take advantage of the vendor connections that you already have. See what your plumbers would recommend for your area as far as preventative maintenance. See what, talk to an electrician, that one of your vendors or anyone that you've worked with or know in your area, see what they would recommend, because they have a long list, and you've got to decide where to build that and how to find that sweet spot in this preventative maintenance package.
We don't often talk about Property Meld and pitch that during Beyond Maintenance, but Property Care Plus is going to be really cool for preventative maintenance and really launching that into the future property management. Next Wednesday, June 22nd, Audrey just dropped the link in the chat. We're going to do a lunch and launch webinar, and the team's going to dive into use cases for Property Care Plus and how to actually implement and build these preventative programs within Property Care Plus. So jump in, register for that. It's going to be a really good session. And then Ray alluded to this earlier, but we are having our second annual user summit, maintenance only, the only maintenance only conference that you can go to. And it will be here in Rapid City, 3 days, action packed. You can check out, go to pmus.com and see the schedule lineup of Audrey dropped that link in there so you can see what we have planned. This year, first time ever, we're going to be offering certification courses on our features in the app. So bring your teams, do that. We're going to be diving into a lot of the thought leadership conversations as well. So really excited to have everybody come here. And Brian, bring your motorcycle, come a week early. Sturgis rallies right then. I promised you we have a parking spot for you right inside Property Meld. We'll kick up the garage door. You can drive right in.
Wow.
And
yeah, I guess you have
working on
with your proximity to Sturgis, you have to have roll up doors for pulling motorcycles. Yeah.
Oh yeah. It gets pretty loud around here that week of the Sturgis rally. It's fun. But
nobody will get any work done. It's great.
That's right. Yeah.
We'll kick out an email by the end of the day with the recording of this on there for everybody. Share with your teams, and we'll have information coming soon about the next Beyond Maintenance.
Hey,
thanks so much, Madison.
Thanks,
Randall.
guys. Thanks for your time. Bye.
Thank you, guys. Take care.